Hi, welcome to the Market Alert for Wednesday, the 9th of August 2017. So starting off with the pound yesterday, late on in the session, the market put in a sell signal. The market moved lower, headed towards the 129.50 level, failed to move any lower. And if you just look here, the reason for that is the most volume we've seen in the pound for a while was buying volume as the market pulled up lively, and the key is in this bar here and this volume here. You can see the range is narrower than the previous bar, and there's a lot of volume there. It's a buying pressure bar, a sort of a test bar as well. So the market comes back towards break even, and then prices remain sideways so far in this market. In the daily chart, prices are sideways to low, a bit of a lift here in the overnight market, but we're below the 20 bar average. Volume's light in the end of day chart, as you'd expect. It's Parliament recess time, and also the first 2 weeks of the summer holes in the UK. News for today. The problem here, by the way, with these black and whatever is Forex Factory, nothing to do with the software, but we can still see what the warnings are, whether they're high or low. And what have we got today? It's just to go back to the UK. Nothing for the pound, and then we've got prelim labour costs. Everything's 130 for their all medium impact. The only thing that's going to be high, of course, is the usual crude oil inventories, which given Trump's threat, which we'll come to in just a moment, towards North Korea, should see a lift in that market. So 330 crude oil figures will be out. And in the Dow yesterday, the market just moved higher. It was able to move higher, put in a new record high, sent an email out and said, watch the 22,150 level. This is going to be resistance, and sure enough, the market was. This interesting sell here, we've not had any successful sells because there hasn't been any sort of news. And as I said yesterday, be warned of any sort of geopolitical event, and sure enough, we've got that now with this item here. We've got North Korea responds to Trump threat, says it's seriously considering a preemptive nuclear strike on Guam. As I've warned in the market alerts before, it will take a geopolitical event, and that's what we saw to move prices lower here and here in the evening session. But of course, as you'll see, the market moved lower, and guess what? You can see the buying here on the overnight in this bar here. There's the spike in volume, and they're now bringing the market back towards the 2250 area, well, 22,050 area, and back above the average line. So it's going to be interesting to see how this one plays out. In the daily chart, very interesting picture, because the first thing that leaps out at me is the low volume. There's no selling around for yesterday. That said, this is an interesting price bar, because I've seen this one before at the top of a move before we've got a correction. And the key to this one is going to be this. Now, I don't know if I can draw this on until the bar is complete, but I'm just going to give it a try. You should be able to. There we go. The 76% retracement from this high down to this low. Watch the market at 22,085 or 22,100 if you're looking for the psychological level, and see how the market fares at that level. Because if it fails to break through this level, then it's going to do this, and then we get the cue that things are starting to fall apart. So this is a very important area. We're looking for a move back, move up, and if the market fails to drive through, then we will see this situation here where the market will move lower. So it'll be good to see the market rally to the 76%, 22,100 fail, and then we'll know we're off to the races as far as the downside's concerned. And of course, there's a bit of a clue in the implied volatility today as well. So in the implied, we see a bit of a spike there on the session for yesterday from 7.29 on Monday, Tuesday 8.12. Doesn't seem like a lot, but that's quite a big spike. We haven't seen a spike to the upside, a decent one, for a while, this being the last off the 762. I think we've got the low in place now, which is also an historic low in the implied volatility, and things are starting to pick up a bit here. But like I say, just the easiest way to gauge this is to look at the daily chart, make note of those numbers, and see how the market reacts and comes back, and how it responds at the 76% and the 22,100 level there. Right, that will do it. Let's see how the market fares in the pre-market session. Only the crude oil figures out today. Interesting. Keep an eye on Trump. If you're on Twitter, keep an eye there, see what he's got to say. Unlike anybody else, he tends to let social media know before he announces to the press, bizarrely, but there you go. So it's going to be interesting to see how things are going to pan out with North Korea. Certainly going to go, if he goes in, he's going to go in big, and of course that will send the markets down initially, but if he wipes them out, there's no doubt gung-ho as they are over there, then we'll see the market rally thereafter, as we did in 2003 once the Iraq War started. So interesting times. Let's see how things pan out. Right, that'll do it for today. Anything to report, let you know. Other than that, as ever, thanks for watching. See you in the next one.